Morning, Rory.
Morning.
Good
Morning,
to see you.
And you?
You're here for our third podcast.
Very excited. Yeah.
Yeah?
Yeah.
It's your first podcast, isn't it?
It is my first ever podcast.
Right.
Yes.
We'll get the initial nerves out the way.
Yeah.
We'll just fire straight into it. So, thanks for coming down. Approved Finance.
Yeah.
Now a partner with our association.
Right.
Great news.
Yeah.
Great news.
And it's quite new as well, isn't it? Like only going live at the beginning of this year. So yeah, very exciting time and perfectly timed podcast.
It is. You were at our Hire Awards just over a week ago.
Yeah.
Good to see you there. Enjoyed it?
Great night. Yeah. The first Hire Awards that I've been to. And yeah, it was a lot of fun. And good to celebrate some of the industry and the innovation and other bits and pieces, and also see some of our people that we already work with there as well, which is great.
Good. So we're here to talk about finance.
Yeah, we try not to put everybody to sleep.
How can we make that sound interesting?
I know. That's the thing. So whenever I get asked to do talks or whatever, I have to lead with the whole, look, can everybody please stay awake? Don't put me on the graveyard shift. We're at Expo. It's finance.
Right.
Yeah.
So we're going to make finance sound sexy today, aren't we?
We are. That's it. That's the mission.
Okay. So for those that obviously don't know you, don't know Approved Finance, just give us a little potted history, your background, where did it all start? Yeah. Just over to you, Rory.
Yeah, perfect. Yeah, so if we take you through how I got to Approved Finance first, so basically, how I got into finance and where that all came from. So in 2007, as a youngster back then.
That was a dodgy time, 2007, wasn't it? I seem to remember.
So 2007 wasn't quite the dodgy time. It very soon went into obviously one of the biggest financial disasters ever. So 2007, I got into the industry as a junior salesperson in a commercial finance brokerage.
Okay.
And then the world ended in terms of 2008, the biggest financial crash.
So you thought a bad decision?
A terrible decision. Yeah. Fortunately, I was still employed, which is unbelievable because, I mean, during that time, we saw lenders, it was daily would leave the lending market. They would postpone all lines, they would cancel all acceptances, and it just came as a wave. We'd just get it. We'd come to the office each morning.
Who's gone?
New lender's gone. All acceptances cancelled. It was the craziest time ever. I suppose it's like a baptism of fire, though. So if we've dealt with that, then we hope, pray that it's never going to get that bad again. So anyway, so I started there, down to very, very few lenders, and then really fighting with the ones that were left in the market to lend to the clients that we had. Yep. So that was a challenge in itself. But again, that was actually a really good time for brokers to really show their worth. Okay. Because the banks completely retrenched, didn't want to lend to anybody. They'd be calling in overdrafts, blowing businesses up, and it was a bit of a minefield back then. Scary time. Yep. So anyway, went through that, came out the other side, and that was actually a newish business when I joined it, and I stayed with that business until early 2019.
So a good stint.
12-year stint within that business. I went from junior to senior to sales director, and then in 2016 I took the managing director role of that business. Okay. Through to early 2019. I think it was always an aspiration to sort of set up my own and establish my own finance business, and it took me till 2019 to take the leap. But again, a funny time to take it because obviously 2020.
Yeah, what happened there? Just remind me, what happened? Oh, yeah, I remember now.
Lots of people spend a lot of time in the sunshine in the gardens, don't they? Yeah. I don't know how I've managed to time it like that. But yeah, 2019 established Approved Finance, and obviously established it with all of the learnings that I had built up over the last 12 years and a very clear vision for what I wanted for the business.
Okay.
So
you're riding high at the moment. You've got rid of COVID. You've survived.
Done COVID.
You're still here. You've set up on your own. So how big is Approved Finance then? Is it small boutique? Is it decent size? Give our members an idea.
So it's coming up to its 6th year now. So April 2025 will be 6 years in business.
Okay.
And we've built the idea and the vision was always to set up a financial services group that offered different products and services within different verticals. So, and each of those verticals have leaders within those particular industry types. So the first one we've got is Approved Business Finance.
Okay.
That specialises in asset-based funding. So for your members, it'll be funding of plant machinery and other various different assets. And also working capital solutions. So cash flow loans, invoice finance, other types we'll probably go and speak about.
Yeah, we will.
And then I've got approved property finance, which is a property finance business. These all follow quite a theme, actually. Approved business finance, approved property finance.
Got it.
Yeah,
got it.
And then final vertical we've got is approved motor finance. That actually specialises in vehicle funding, but high-end, bespoke and tailored vehicle financing for high-value vehicles. So either high-value SUVs, like director vehicles, prestige cars, that type of thing. And so, yeah, those are the verticals. And as I said, we've got experts within each of those. There's just over 50 people across the different businesses. And we transact, well, last year, we transacted just over £150 million worth of business. And this year we're on a bit of a growth trajectory because in the first quarter 2025, we funded 52 million. So the idea is that we'll exceed 200. We'll probably go nearer 250 million this year in terms of the origination and the amount of business that we'll transact for our client base. So yeah, it's been a really, really good ride. I think we're on the right path. There's a long way to go. We've recently set up, well, I say recently, 2 years ago, we established our own lending book. So not only do we broker finance, so arrange it with a panel of lenders, we also established our own lending book. So we'll lend on transactions of our own money as well. So that's another part of the journey. So yeah, as I said, achieved probably quite a lot over the years in terms of establishing the different divisions, getting the right people in, and writing the right types of business for our clients. But sky's the limit.
Yeah. It certainly sounds so. So you mentioned the commercial deals. I noticed something recently on LinkedIn, a large property deal that went through.
Yeah.
Probably worth mentioning that. I know it doesn't necessarily correlate to hire, but just to give our members an idea of this, what you can get into and the sort of the size of the deals that you can do.
Yeah.
Are you happy to discuss that?
Yeah, of course. Yeah. So that one was actually, that I suppose actually does really show what we're able to do with the right person on the right transaction. So that client came to us through our London office. So we've got a London office and we've got a presence up there, who are working sort of introducers and partners who bring us clients that have finance requirements. So that came through that office, and it was a requirement for, I think, 3 or 4 freehold blocks, so buildings, with apartments within it. I think the slight quirk within that is that the buildings were let to housing associations, so not your standard tenants, not your standard private tenants. So that was a challenge in itself because that restricts the number of lenders we're able to go to. The transaction had already been to market as well through another broker who couldn't get the right loan to value on it, so couldn't get the right lending amount on it, but came to us. Absolutely a challenge, but one that we're able to put away. We got the client exactly what they wanted in terms of loan to value. The actual difficulty there is that the housing association does add value because it's got a long-term lease, and so the actual market value of that as an entity, building plus the lease, is higher than just the building itself, so just the bricks and mortar. And so most lenders just go bricks and mortar only, because in a worst case scenario, we'll take that back and we'll recover our money. But we found a sensible commercial lender that said, well, we've got a 15-year lease with the housing association.
So it's guaranteed money, isn't it?
That's it. So I've got to take that into account. And yeah, we did the transaction. I think the loan sum was it's 14 million. It was actually 13.9 million. So, and that was all done. Transacted that actually very quickly as well. For the transaction is pretty complex. But yeah, I think all said and done, it took no more than a couple of months to put away. Where I think when people come to us, they say, "Oh, look, we're bringing this requirement," and they always forecast like 6 months or something. I think what we want to do is we want to bust some myths that it can take 6 months. Of course, it can. Anything can take.
If you get on with the job.
If you get on and you get the right professional service providers in place, it's not just us, it's not just the banks. There's also, you've got the valuers, you've got the solicitors, you've got any other professional services that need to be involved in it. As long as everybody's very, very clear as to what part they're playing, you can get these things done so much quicker.
And I suppose that shows the strength of your team, doesn't it?
Yeah.
If everyone's pulling in the right direction, it could take you 3 months to sell your house. Yeah, of course, to sell your house, it could take 3 months to transact the whole deal.
Yeah.
But you're saying 2 months, you've done an over £13 million deal. I mean, it's just, that's fantastic. Yeah. That's good. So, I've written on my little crib sheet here, the perception of lenders.
I suppose it depends who you ask.
Yeah.
Yeah.
But the finance world, it can be a minefield. So how can you sort of make that easy for our members, especially our small SMEs? They're going to come to you. They're going to say, it might be a case of they've got some property they want to buy. More so, it's probably going to be, look, I've got 150,000 pounds that I need to raise to buy plant machinery, X, Y, and Z, beginning of my budget. You know, how can you make that really simple for our members, rather than they're going to the high street banks or ringing potential finance companies that they just don't know, they've got no relationship with, they don't want to get caught out? How can you make that process nice and easy for them?
Well, yeah, so I think, great question. Well, what we need to do, first of all, is understand that particular client and their borrowing capability.
Yeah.
So it's doing a discovery call with that client and really understanding their business.
Yep.
Why they're wanting to raise, what they're wanting to raise the money for, and then being able to identify ourselves the right lender to fit that client profile. So it's very interesting. So the high streets or the alternative market, such as a broker, we actually, funny enough, across our funding panel, we deal with the high streets.
Do you?
Yes, yeah, we do for things, and in certain instances, they are the right solution. But in most, we go alternative lender. So whether or not that's a challenger bank, whether or not that's a small boutique finance house, depending, and it all varies very much dependent on that particular client profile. So we are best suited to be able to, we feel, be able to advise a client on where to go. So there's many clients that will come to us and say, well, look, we deal with the high street. We've got a credit line in with the high street.
Yep.
This is the rate we're paying. Can you beat it? And in some instances, the answer is that deal is fantastic.
Go with it.
Draw that credit line until you're at full exposure. You can't borrow any more on it. Then we'll have another one lined up for you to go for. And so we're not always saying we're going to be the perfect solution for that client, but we will be able to tell them if what they've got, benchmark it and say that's what you should do for the time being. Or they may say, look, this lender won't take this particular asset. They may say, look, it's an excluded asset class and they don't want to fund that piece of machinery. And we'll say, that's fine. We've got probably a dozen lenders that will. And it may be only ever so slightly more expensive than your current rate, but obviously worth it because they're happy to lend on the asset. But we will be able to provide that advice. And I think that's exactly where we put ourselves in the market, that we are, in terms of a introducer or commercial finance broker, we are going to be able to provide the cheapest solution. That isn't to say that it will always beat your high street, because sometimes it won't, but it will be in the alternative space. We will find you the best next fit. Okay.
I think it's an important point for our members here, talking about the alternative space, because everyone knows the high street, everyone knows Lloyds, Finance, Hitachi, all those people that they've all heard of, Motor Finance as a manufacturer, JCB Finance.
Yeah.
But when you speak to a member and you put a name of a bank under their noses that they've never heard of, they go, oh, I'm not so sure about that. I've never heard of that company before. How can you provide a bit of reassurance that they're all right to deal with? You know, I know you've never heard of them, but they're all right to deal with because they're not on the high street.
Yeah.
Because I think that's really important, that you can provide some comfort for our members around that.
Yeah, of course. And there's I think there's various different tiers of lender as well.
Okay.
And so and each of them are positioned to deal with certain borrower profiles. So if you've got an established hirer, so we consider 3+ years trading.
Okay.
Profitable and a balance sheet of significance. So a net worth of the company that is significant, say $500,000+ in terms of balance sheet.
Okay.
That's an established hirer, and we would look to put them to what we consider the tier 1 lenders, the tier 1 alternative lenders.
Yep.
And then you've got you've got people that you may recognise, and maybe some of the members would. People like Investec Bank, who are a South African bank.
Yeah, know them.
You've got Aldermore Bank, who again are they're actually being purchased by a South African bank, first round. Okay. Bit of a thing. You've got Shawbrook Bank. They're again challenger market.
Yeah.
And then you've got other ones who, like I think you mentioned Hitachi.
Yeah.
They've got another stream, which is Navuna. Again, that was Hitachi Finance was bought out by Mitsubishi, rebranded to Navuna.
Right.
So they've all got, even if they may be the shop front or the fascia that we are presenting, they're all very well funded and part of larger institutions. So they've got, and when they put credit lines in place, for clients, a credit line being a limit of funding that a client can draw down on over a certain period. So many clients, especially in the hire market, are regular buyers of assets.
Absolutely. Yeah.
So we and the products that are many times the right solution are a credit line facility. Somebody may say, well, over the next 12 months, I'm going to buy £2 million worth of plant.
Okay.
And that's going to be on a buying cycle of a machine or an asset or two every month. And I want to draw down on it at the end of every month rather than taking it all day one. And so we'll set that up with the lender. But obviously the member needs to be confident that facility is going to be available when they want to draw it, and they want to jump through hoops to do it. Yeah. So absolutely get it. And I absolutely understand why they would want to know that that bank is there, going to be there, able to fund it. Yes, the credit line's there day one, and it will still be there month 12 when they want to draw the balance of it.
Right. Okay. So I think we've easily established that when it comes to asset purchases for the fleet, that's pretty straightforward stuff.
Yeah.
Okay. So what if you get a member coming to you saying, right, okay, I'm on a massive expansion plan. I know of another business that I'd like to purchase. How can you help me there?
That's an interesting field, and that does require some specialist input on M&A. Fortunately, we've got 3 people internally who deal with merger and acquisitions, so M&A. They deal with MBOs, so management buyouts. It can be funded in many different ways. The most traditional or standard way of funding it will be through a suite of different finance products.
Okay.
And so if it was to a hirer wanting to buy another hire firm, what we'd look to do is we'd look to analyse what their business, in terms of the actual borrower's business, was able to leverage within their firm itself.
So unencumbered assets.
Unencumbered assets.
Okay.
Maybe some cash flow facilities. If the business was able to service it, we could look at putting something in there.
Yep.
So leveraging the debtor book on an invoice finance facility. So we'd look at their incumbent business.
Yep.
We'd then look at the target business.
Yeah, that's what's unencumbered there as well.
That's it. Get under the skin of it. So we'd leverage the debtor book. We'd leverage so that's on an invoice finance product. We look at the trade debtors, who the trade debtors are, and look to leverage finance against those.
Yep.
We'll also look to leverage against the assets within that business. And again, we can do a tag-on cash flow facility to make the transaction work.
Okay.
We'd also look at the structure in which they were proposing to buy it. Lots of clients will come to us and say, look, we want to buy this business over here. We're going to pay £3 million for it.
Yep.
Fine. Okay. It's then understanding how that £3 million is going to be paid. Is it all going to be paid on the nose? Is it on the day of completion?
Yeah.
Because in many instances, that isn't the right thing to do. Because you don't always, as much DD as you do, due diligence you do on a business, you never know what you're buying until you've actually bought it.
Yeah.
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 And so the right structure for all parties really is some type of payment on completion, typically out of the leveraged assets, and then some type of deferred consideration.
Yeah, sure.
Where they pay the seller over a period of months or years or whatever.
Yeah.
And we'll look at that structure and we will help the client or the borrower, prospective borrower, come up with something that not only sort of fits the seller and the buyer, but also fits our lenders as well, makes them comfortable.
Yeah.
Because that's part of the challenge in itself. Our lenders don't want to be just putting out money all day one and then the seller sailing off into the sunset with no no liability or potentially, So yeah, and that's why it requires some real expertise on those.
Yeah.
And also we have to do quite a lot of financial analysis, because you've got obviously the borrower itself who's come to us wanting to buy that. And then you've obviously got their business over here, and that needs to
So you've got to pull them together.
You've got to overlay the financials. You've then got to do some forecasting, because lots of people don't just want to buy and leave it as it is. They want to buy and then and grow it. And so you need to look at the forecasting there. You need to overlay them together. You need to spread that over 3 years. You need to do cash flow, balance sheet, profit and loss, projections over it. And so you really getting
complex.
You're getting under the skin of it. And we've seen people come to us, and other people within industry who don't know that market, and they're more transactional, more asset-based.
Yeah.
You can make a real mess of it, because it is really complex. And if it's not done properly day one, and it's presented poorly to the lenders, they don't want to do it.
Yeah.
They're not even going to want to do it when you're
appetite
it.
is,
It's just, when you're put off something, you're like, I'd rather just leave it. And then it may be brought to you with a full info memorandum pack and all packed perfect, brought to you, and they're going, no, we said no on this one. You're like, oh, well, you haven't said no. But no, I think once people are out, it's very difficult to convince them to come back in.
Yeah.
And so with M&A, it's really, really important that people speak to a specialist. And I'm not saying that's just us. I'm saying speak to a specialist. Make sure they are a specialist.
Yeah.
There's various different companies out there, but we ourselves do it, and we do it well.
Brilliant. Okay. You touched on invoice discounting. Now, there'll be members out there that think, I've heard of it, don't really understand it. How does that work?
Yes. So I suppose if we break it down in the simplest form, you've got your trade debtors, so the invoices that you've raised to your clients, and typically they can be on payment terms of 30 days, sometimes 60. Sometimes 90.
Yeah,
how high do I go?
We don't start talking about the people at 90 days.
Rory. How high do I go? But yeah, so typically, and you've had to front those costs associated to those invoices, and then you have to wait for the money to come in. What invoice finance does is it raises money against those invoices, and that can be 90% of the invoice it can give you on day one.
Okay. Yeah.
So they will go, right, I've got a £100,000 invoice due to X client, and our lender will go, right, that's fine. We'll advance you £90,000 of that invoice now. And then once...
So that's when the invoice was automatically raised. Month-end invoice run's been done.
Yep.
You get 90K on the nose.
On the nose. And then when the clients pay down the money, the 100,000.
Yeah.
The invoice finance company will just collect their fee off the top of the balance.
Okay.
Yeah.
Okay. So I'm thinking then that the invoice finance company must have a link into, say, for example, Sage or something like that.
Exactly.
They'll be able to see the debt book
bang on
electronically.
Yeah, bang on. And that's why invoice finance now is so much simpler than it once was, because everybody's electronic with their invoicing, and things are all linked in, and it's a very simple transition to start doing invoice finance, but also to move invoice finance companies as well. Yeah. Whereas historically it was very difficult. Once you were with a invoice finance house, to leave them was nearly impossible. But now it's opened the market up with all the use of these electronic accounting systems, and also our lenders' invoice finance systems as well. They all talk to each other, and it can be switched over really quickly. So yeah, it's a really good way of managing cash flow and easing the pressure.
Well, that's the bit. I mean, it's that old saying in business, cash is king, isn't it? You know, you need that cash flow. And it's interesting because, for our members, as much as asset finance is important, cash flow is equally important, more so because there's peaks and troughs throughout the year in hire. We're in the great season now. All that time, that sun's shining. Yeah. They're doing really, really well.
Yeah.
But get to Christmas when there's less billing days in December because the builders decide, right, that's it. Week 2 of Christmas, I'm hanging my boots up for a couple of weeks. Yeah. And then the slow start in January. That's when things get really tight. Can you help our members in that area?
Yeah, we can. And it's realistically the best thing to do is plan for that And that's what we're really good at. And when we're setting up finance agreements, we have conversations with clients, and something that the team have put in place for HAE members is a product that fits that perfectly.
Okay.
So it's a seasonal payment product.
Right.
So we'll work with the client to identify their low season as such, or where we know the industry, it's feast or famine, and we know that some months are really tough, and members are therefore having to be really careful in terms of their own cash management to make sure they've got enough resource in the tank for those lean months. So what we're saying is, look, you focus on your business and growing it and ensuring that you really blow the doors off when the time's right.
Yep.
We'll make sure that the finance products that we put in place suit your business. So if it is going to be lean, which it will be in December, January, February, and then we'll pick up in March, those 3 months, you shouldn't be paying full payments on your finance product. You should be paying low payments, reflective of the low revenues during those months. So that's what we'll do. We'll tailor a finance package. We'll have 3, maybe even 4 low payments.
Okay.
And then over the balance of the 8 payments of the year, you'll be paying slightly higher payments than you would if you were paying 12 equal.
It works itself out over 12
months. It works itself out over the 12 months. It works itself out over the 4 or 5 years, 3, 4, 5 years, whichever you're going to borrow over. And there's no additional interest costs. It's just structured in a way that means you're not constantly checking a bank, worrying about how you're going to make it meet ends meet, or in some instances having to borrow like working capital at higher rates, because naturally working capital, especially in what's considered maybe a bit of a distress facility, I haven't got cash, I need cash. They're typically more expensive products.
Okay.
So they carry a higher interest rate. So you come in December, you're like, I need some quick cash. That will be a more expensive product than if you take an asset-based funding agreement with low start payments.
Okay.
So low payments, low off-peak payments. And so you're benefiting from the best rates, the right structure to fit your cash flow.
Flexible is the words in my head.
There you go. Bang on. Yeah.
Isn't it? It's just flexible, isn't it?
100%.
Rather than just being so rigid. Because, I've known members think, oh, God, it's really tough. It's really tough at the moment. And we're in December. Because December always is going to be tough. Less billing days.
Well, you were a hire yourself.
I know. You can see it coming down the tracks. Yeah. And, you hope the VAT quarter's not landed there with either. And it's you've got to find that big chunk of cash that's just not there.
Yeah.
That's good.
So interesting you touch on VAT, actually. That's a product that many people don't know is available. So VAT funding is something that's available as well. So you can do VAT and tax funding. So corporation tax, that hits sometimes at the wrong time. Your best intentions, when it's coming down the track, but something else comes in, or you sometimes get hit with some bad debt. That happens.
That's your 100 grand man hasn't paid you.
There you go. Exactly. So your bad debt hits, you got corp tax sitting there that needs paying. So we have some corporation tax products where you can borrow against that. HMRC will be paid directly on the product, and then the repayments will be collected over 12 months up to your next corp tax date. VAT, if that comes and it's a shock because something else bad has happened, and you need to fund it, you can borrow. HMRC will be paid, and then you'll pay in 3 equal instalments rather than having to pay it all today.
Right.
They're actually competitively priced products. That's something that lots of people use, but many people don't know about.
I was exactly going to say that. I've never heard of that.
Yeah. It's as you can imagine, really popular product. Lots of people, once they're on the VAT product, they just go, to be fair, this is actually a really good way of managing my cash. I just stick on it, and they borrow quarterly. And actually on those, we have 12-month rolling facilities on VAT. So they'll set up a credit facility as such. They'll draw on the first VAT quarter, and then they say, look, that's in place. So just continue paying your 3 months. And then as soon as the next one hits, just send us your statement as to what's owed to HMRC. And as long as nothing adverse has been registered in your borrowing profile, then we'll just release documents on it, release the money to HMRC, and it's done within a day. Literally all done. They send over the statement, the documents are signed, they're paid. It's the simplest product once it's set up. Really, really simple. And it works fantastically.
That sounds brilliant.
Yeah.
I think lots of members knowing about that now will be thinking, do you know, that just knowing I've got that if I needed it. Yeah. That's the piece. What about, I'm going to chuck you a bit of a curveball now.
Oh,
Rory. You've lifted in the whole finance world for our members. What about some members who may be thinking, I just need a bit of help with our finance structure? Is that something you guys can help with? You could send one of your team in to say, let's have a bit of an overview. What's on asset finance? What isn't? Cash flows? Just to take a bit of a helicopter view of the whole lot and say, look, we can help you in this area, that product. The result is that.
100%. And in some instances, we'll take a view and we'll say, look, we can identify maybe some cost savings here or some restructures here. Sometimes we'll say, look, what you've got actually is probably all right, but maybe in the future, when drawing a new facility, consider different payment structures, or maybe borrow slightly more than you have been because you're putting into larger deposits, which means it's hitting your cash flow. And we'll just help the structure, which is not always going to be that we'll provide you with some type of solution in terms of us actually putting funding in. But yeah, our team is great at that. Exactly, health check. And sometimes we'll go in there and the clients will tell us that they're paying a lot out each month on asset finance and other
different lenders.
Yeah, exactly. Yeah. We know that some of these high businesses have significant outgoings because they're huge firms, and the business is very much based on new asset, regular replacement assets, high value assets, and therefore you need to leverage those assets to buy them. So big piles of debt. Yeah. And so if you've only got 12 months left to run on an asset and you're going to retain that within the fleet, then you could reborrow against that, settle that 12-month funding, stretch it over 3 or 4 years, significantly reduce your monthly payment, and then improve your cash flow within the business. So we can save tens of thousands for some of these bigger businesses on a monthly basis, which then just goes back in as cash within their business and allows them to grow further, or just reduces the stress, because we know that cash is the biggest stressor, and it detracts from what people should be doing on a day-to-day. If the managing director is constantly stressed about their cash position, then they're not out there looking for growth. They're not out there
doing the hires, because that's what they're about. They're hire people.
That's it. Exactly right. So, and we know how stressful that is. Like we're an SME. We know we've been through the journey. Cash, as you said, cash is king. Yeah. And if you're stressed about cash, you're not focused in the right area.
Yeah. Good. Can we talk about some of the clients that you've helped? I know I've had a quick look on your website again this morning coming on the train, and thinking, some names I recognise.
Yeah. So, well, what we can do is we talk about clients that we've helped in terms of like partner clients we've helped, because they're the ones that we go to market with, and we talk about. So, obviously, all actual individual clients have to be.
Oh yes, of course. Yeah, GDPR piece.
Exactly. Yeah. And supplying partners, though, so these are people that we work with in providing finance to their clients. Yep. So very much like we work with the HAE in providing funding to the members. We work with a raft of introducing supplier partners. One of them has actually recently become an HAE member. Cleveland
Containers, Cleveland Containers. They were shortlisted for an award at the recent Hire Awards in London.
They were indeed. Yeah, it's good to see the guys down there. So they are a supplier partner of ours. So they sell containers. They've also now got some modular, and also they've gone into welfare units and other bits as well. So they work with us on a partner basis. And so when they sell containers, we provide the funding solution to their clients if they finance it. Good. So we're there at point of sale. We also work very closely with them because they sell to various different businesses. They sell into the construction sector. They also sell into the self-storage industry. And so we finance a like a vast array of different client and borrower profiles for them and their clients. Worked with them for a few years now. Really, really good guys. I think they're one of the biggest container sales companies in the UK. So they're a really good company to work with. Probably another one your members will know of is Alltrad Group.
They'll all know about the mixers.
Yeah, there you
I think every hire company in the land's got an orange mixer on their fleet.
So we work with Alltrad Group in providing funding to their clients as well. In particular, there's a lot we do in their scaffolding sector.
They're a big organisation.
Big, they're huge.
More than just mixers.
More than just mixers. But yeah, so we work with them and several of their depots throughout the UK and providing funding solutions to their clients. So those are a couple of names that your members will probably know about. But again, it's majority of our business is built on referrals. Okay. Or introducing supplying partners. And we find that really useful because it just holds us accountable to the high standards of customer service and excellence we want to deliver. Yes. But working with supplying partners ensures you're doing that day in, day out. Because you can't let your supplying partner down. You've got this real key here. This instrumental will get feedback from every single one of the various different clients that comes through. If you're just getting direct clients in the door and you let one of them down, well, they're only going to tell themselves, their friend or whatever. If you let down your client that's brought in for a supplying partner, that could have real significant ramifications. Exactly. Yeah. So that's why we find it really useful to have such a great range of introducing supplying partners and source our business through them. It gives us a better chance of conversion, but also holds us accountable at every step of the way in making sure that we provide the right levels of service. And
I think for our members, I was reading your Google reviews this morning coming on the train. The Google reviews speak for themselves.
Yeah, no, it's that's another thing we pride ourselves on. And it's difficult. It's difficult to get people to be like really happy about finance. We've given them some debt and some monthly payments, please don't. But no, the service levels are fantastic. And we make sure that that's the same across each of the different verticals within the business. So whether it be business finance or property or motor, it's all consistent across. And so as you said, the Google reviews, fortunately, they speak for themselves.
Yes. Yeah. So the markets. Come on, Rory. What? Predict them for us, please. But we're in a bit of a weird time with Mr. Trump throwing his tariff card left, right and centre and everyone getting a bit jittery. And how can we keep our members, calm that the world's not going to fall apart and if they need finance, it's still available. They're not going to be paying through the nose and everything's all right underneath the skin of Trump and his madness, Ukraine and China. It's just,
What do you think about, what do you think the ramifications are for the domestic market, though, being like an island nation? Do you think that the tariffs, do you think that some of this is going to keep stuff on the shore? What do you think?
I think there's a lot of noise.
Yeah.
I just think there's a lot of noise.
Yeah.
I mean, I look at the markets and they have fairly bounced back and, it's not headline news anymore, is it?
No.
And, I don't want to get political, but Trump, he just likes to throw his weight around and all of a sudden he calms down or his advisors tell him, just hang on a minute, don't fire that head of staff that you're about to fire.
Yeah.
And everyone, settles back down again. So I think, I'd like to say it's a bit of a storm in a teacup.
Yeah.
But I'm not from the finance world.
Look, I think very much the same. Our panel of lenders have remained pretty relaxed in terms of where they've stayed with the rates. No, there's no knee-jerk reactions, and there doesn't really appear as though there are going to be any. Okay. The markets themselves still predicting the same as they were sort of pre-Trump, really, which is they are going to, we're going to see a slow reduction in the Bank of England base rate until probably some point in 2027 where maybe it will find the new norm. I think so. Currently at 4.5. I think people are like saying that 3.5, 2027. We're seeing lenders still competing to put funds out there in the market. So liquidity still appears strong. Lots of lenders are fighting for the same type of business. So everybody wanting tier one clients, tier one assets. So tier one clients, as we said earlier, established businesses, tier one assets, like plant machinery that's got really good residual value. Everybody wants to lend on that. because you're lending to a very strong borrower.
Fairly safe, isn't it?
Fairly safe. So you're all competing with that type of business. When you get into tier 2 clients, the market dries up slightly, and that's where you really need somebody to come in there and make sure you're getting the right product. Tier 2 clients, like newer businesses, like newer hire businesses that are leveraging fast because they're growing fast.
Yeah.
And those are the ones where they really need help. Not so competitive in that market, but still lots of lenders. We call some of them considered off the beaten track, ones that people don't know the names of, etc. And so those ones are where people really need to speak to specialists. So again, the lenders are there, the liquidity's there, the rates currently are good. I don't think people should worry about borrowing now, fixing it for 5 years, because even if it goes down, it's not materially going to change.
Yeah.
So we're seeing lots of people, say on the property market, if they're borrowing on a commercial mortgage or a buy-to-let facility, lots of people are fixing now. They're going, well, look, realistically, they're not going to drop dramatically, so let's fix it, especially with it being a bit of an unknown quantity, because even though we're predicting that it's going to be okay, you never know. Something crazy could happen around the corner. So
really what we're saying there is it's still good news for members. If they want to grow their business, they're buying kit all the time, if they need finance, it's all right.
Confident.
Put it on finance. It's still in a good place.
Yeah, confidently borrow. Actually, more so than ever, really, because we've seen people's margins get squeezed. So therefore, that obviously then leads to cash erosion. So people that have maybe organically just funded asset purchases through their own cash resources, they're now going, actually, do you know what? We want to maintain a certain amount of cash resource.
Balance,
So let's not continue buying. Let's find the right finance products and finance these assets, and then just make them pay for themselves.
Yeah.
I'd say confidently borrow. If the metrics work, what you're hiring it for versus your finance costs and your operating costs, just confidently borrow. Yeah.
Makes sense, doesn't it?
Yeah, exactly.
Makes sense.
Yeah, for sure.
Sounds like we've made finance sound quite sexy over the last hour, Rory.
I know sexy might be too far.
Too far. But no, I think it's been very insightful for the members. I mean, my takeaways from it is still a good place to borrow money. You can help our members, whether it be asset finance, commercial finance, short-term cash flow loans, invoice finance. There's a whole medley that you can go to through Approved Finance to help our members. Yeah. And it's up to our members to decide, what works for their business. And that's key, because they all want to grow. They've all got assets to buy. They've got to find that money from somewhere.
Yeah.
So I think it's great that you're partnering with the Hire Association, and we've done our due diligence on you. We're happy with what we've investigated, and that's good for our members. So for our members to get in contact with yourselves, obviously the advert's on the website.
Yeah.
So they can click through to that, to your team.
Yeah.
Obviously you've got your own Approved Finance website, which they can click onto, or they can contact us direct at the Hire Association. We can obviously point our members in the right direction, can't we?
Yeah. And when they make contact with the Approved team, if they just explain that they are a Hire Association member, then they will get directed to the right team internally. Yep. You need to make sure you're speaking to the right person. The people that are within our team who deal with your profile of borrower,
perfect,
day in, day out, because they'll ensure the right solution's found.
Excellent. Rory, it's been brilliant. Thanks for today.
Thanks for having me.
Okay, thank you.